makers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, Delcy Rodríguez has been sworn in as acting president of Venezuela after the capture of Nicolás Maduro, flashing warning signs that a new wave of repression has begun. At least 7 journalists and members of the press were detained on Monday. Meanwhile, Nicolás Maduro says he's an innocent man after pleading not guilty to narco-terrorism charges in a New York court. Now, the raid on Caracas over the weekend has put Danish officials on high alert. The Prime Minister, Mette Frederiksen, warns that the NATO alliance would end if the U.S. were to attack Greenland and says Donald Trump should be taken seriously.
Firstly, I believe that the US president should be taken seriously when he says that he wants Greenland. But I also want to make it clear that if the United States chooses to attack another NATO country militarily, then everything stops. That is, including our NATO, and thus the security that has been provided since the end of the Second World War.
With us now, Christopher Sabatini, Latin America Senior Fellow at Chatham House, and Hugh Gimber, a Global Market Strategist at JPMorgan Asset Management. Thank you both for joining us. Honestly, what is going on? I mean, it's been quite a couple of 3-4 days. And I guess, Chris, the question is, should we have been expecting it? It's not like the Trump administration has ever made any secrets that they wanted national security, assets and strategies.
We've seen this happen over the last 6 months. Donald Trump has steadily built up the U.S. naval presence off the coast of Venezuela using increasingly inflammatory language, but with a very changing narrative. First, it was narco-terrorism. Then it was just removal of Maduro, which it was all about. We knew that. But we knew once that ramp up had started, they didn't achieve the sort of palace coup that he was hoping for, that eventually there would have to be some kinetic action, as they like to say now in the Defense Department, that would remove Maduro. It was successful. And here's the issue. As you're saying about Greenland and other places, I think Trump is going to feel emboldened. This was, by his measure, a very successful mission. Now, whether this will extend into the democratization and the opening of the markets in Venezuela, we'll have to see. There's a long way to go still, especially with the vice president who has a checkered past at best. But for Donald Trump, this was successful. So Greenland, Colombia, Cuba, truth be told, a lot's on the table. I doubt he would invade Greenland, but clearly he's feeling a little bit intoxicated by his victory. Yeah,
and if you actually listen to his word, he seems to say, look, it's next, and, take me seriously. This is what he says, not even the Danish Prime Minister. Hugh, the market is cool as a cucumber. They're just looking at AI, looking at, what AMD and Nvidia said, and they don't worry about sovereignty and all of that stuff.
I think that is the right reaction for now. Whenever you're dealing with a geopolitical issue, markets have been taught very clearly over recent years that until you get to the point where there is an economic impact, there should not be a major market reaction. And when we look at Venezuela, we know it's a very resource-rich country. We also know that oil production capacity has been damaged extensively over recent years, and therefore there is no immediate prospect of a big change in oil supply, and therefore there is no immediate prospect of a big change in the global economic outlook, which is strong for 2026. So obviously, geopolitically, this is a very important issue, but for the markets, I think the right reaction so far has been to broadly look through this story.
I mean, if you're Saudi Arabia, if you're China, would you not say, actually, I want to diversify away from U.S. assets because this doesn't feel right?
Well, that's already been happening. That, for me, was one of the big stories of last year, where we were all talking about the build-up in AI sentiment and all of the concentration of the US market, where a broadly regionally diversified portfolio was already outperforming in 2025, with the US market lagging. And so I think this probably does add to the incentive for global investors to be looking elsewhere around the world. But that case was already rock solid based on what we see as broadening global growth, broadening by sector, broadening by region, and therefore investors already wanting to embrace a better regionally diversified portfolio.
And Hugh, I want to ask you about AI and, of course, some of your macro views more extensively. But, Chris, when you look at what's happened in the immediate aftermath, right, of that really stark removal of Nicolás Maduro, what happens legally? I mean, there's a number of questions of whether oil companies can just, go in and kind of take over. What are you asking yourself?
Well, quite frankly, there's a lot to do, both in the terms of the regulatory framework that has been developed over the last 20 years of first Hugo Chavez and then Nicolás Maduro, a whole series of basically regulations that require any international investors in the oil industry have to partner with the state oil company PDVSA. We did an analysis in 2021 of the current state of the regulatory legal framework compared to the competitive set of Venezuela's oil-producing countries. The truth is, first of all, there needs to be, some are estimating at minimum $100 billion worth of investment. Others, we estimated about $200 billion worth of investment to get it up to speed. But then you just have this entire tangle of regulatory reforms as well as infrastructural needs, everything from basically upgrading the equipment to upgrading the ports and other things, and even the electricity that services those areas. So there's a lot to be done. This is not a matter of just turning on the spigot and filling up oil barrels and pushing them back out into the market.
Chris, yesterday I went back and actually read the 35 pages, whatever, of the national strategy paper that the White House released in November, and it was very clear, if you read it carefully, that they talk about the southern hemisphere of the Americas as belonging to America, more or less. Do you think Greenland is next, or is that really a step too far? I don't know what's real or not anymore.
Yeah, I think that's true of a lot of people right now, and we do have to separate sort of what is the bluster from what is the reality. In this case, I do think in the case of Greenland, despite some rather immature Twitter posts that have happened, I think this is really a negotiating strategy for Trump. I can't imagine him invading Greenland. I mean, it would be against an ally, but also, quite frankly, it would just be difficult, even more difficult to justify. Greenland's not governed by an illegitimate president as Venezuela was. I think this is sort of going back to Trump's days as a real estate mogul. This is, you make extreme demands and then you bargain down from those. And I think that's where he's going with this. So maybe control of minerals, maybe more expanded U.S. military presence on the island. But it's difficult to conceive, although there are a lot of things that are happening right now that are difficult to believe would have happened, say, 2 years ago. But it's difficult to conceive of American invasion of Greenland.
How do you diversify a portfolio geographically, given all of these unknowns?
Well, I think you focus on where we do have confidence. You look at Europe as a good example here, where consensus expectations are low, growth is already on the up, inflation is in a good place. And you can look at that region, you can look at the stock market there, where investors, I think, are still deeply sceptical, and yet you have none of the geopolitical uncertainty that we're talking about focusing around the US administration. So obviously we can start to think about impacts on Russia, Ukraine, and how the conflict in Venezuela might feed through into knock-on impacts there. But broadly, the markets, I think, have already moved on from that because, again, the economic impact and the commodity disruption that we saw heavily in 2022 is broadly already behind us as well. So we need to separate very carefully between what are geopolitical and, to an extent, humanitarian questions, which are very serious, versus the market impact, which will all come back to economics.
But, Hugh, for example, inflation. I mean, the market's largely moved on from inflation because of tariffs-induced, inflationary pressures. Are they right? Because we're also seeing wage growth creep up a little bit in the U.S., so maybe something to keep an eye on.
Yeah, I mean, wage growth sounds like a much less exciting topic, let's be clear, so far this year. But I think it is absolutely essential for 2026 because it's the difference between the Fed being able to look through above target inflation and needing to take it more seriously. We see the moves in copper so far this week and the inflation pressure that could start to build. If the Fed's looking at inflation that's being driven largely by commodities, it can ignore it, because it can say, look at the labour market, think about our dual mandate, and therefore we can deliver the easing that the markets are expecting. When you start to see labour markets tightening up, wages picking up, then the Fed would have to think very differently about some of these moves in commodity markets. So wages, I think, are absolutely critical.
I mean, we're also expecting a new Fed chair. We have a couple of names. It hasn't been announced. We're expecting it now, but the White House is distracted otherwise. Does it make a difference to the market who actually is in charge? Because so far, again, they've looked through that.
I think all of the candidates on the table are fully credible, data-driven candidates that the market would take very seriously. I think it's more about the economic backdrop that they are working within. So the markets, I think quite rightly, have said we now have a Fed which is on pause for the foreseeable future. No need to move too quickly over the first few months of the year. But let's think more seriously about the second half. And we do see interest rates coming down, despite the fact that we have above-trend growth in the US and above-target inflation. Broadly, that's a pretty good environment for stocks, provided that the market can get its head around this notion that the labour market continues to cool. So that I do think is absolutely essential.
Chris, China's very, very crucial to all of this. I mean, do they just stand by and look at the US, take a lot of South America without retaliating or doing anything about it?
I think, well, first of all, China will be hurt. It has a pretty large, relatively speaking, loan portfolio for Venezuela, in which most of those loans were being paid back at below market price oil. It's going to lose that advantage if, indeed, Donald Trump and Marco Rubio decide to basically try to squeeze the Delcy Rodríguez government into being more compliant to U.S. interests. So that's the first thing. I think China's going to stand down, though. This isn't a fight they want to pick, quite frankly. There's the other issue, though, for markets that's going to be important in the case of Venezuela, is renegotiating the $160 billion worth of Venezuela's defaulted debt. Yeah. And you've got a lot of hedge funds and financial services sector officials queuing up to try to renegotiate that. And the truth is Delcy Rodríguez in this front has been a known quantity. She's been the go-to person for a number of the hedge funds and the bondholders, as well as the oil companies. But there's a lot also there that has to happen to change it. You need an IMF sort of study of the books. They need to open up their data and prove their data. But at a certain point, it's quite possible we could see a debt renegotiation, which really could have a huge upside for a number of bondholders, because it was priced at about 5 cents on the dollar. It's already gone up by about 20%.
Yeah, and we're hearing rumors that a lot of the big banks are already circling around. We're trying to figure out what opportunities are. AI. Is it going to save us all in 2026 again?
I mean, I think the OpenAI IPO is the big event of the year. I think that's undeniable at this stage, that we're all waiting for this big test of market sentiment. So far, so good. We've seen a good start to the year in Asian stocks. Sentiment in places like Korea is still very positive. And you have now talk of, actually, is OpenAI going to start to make the jump back towards the Gemini progress that we saw with Google last year? This competition is healthy. This is good news, because companies are fighting against each other to win the race, and that is driving progress. So I still think the story is intact for this year. The valuation is obviously the key question, and that's where that more diversified approach we think is really important, not overlooking some of the Asian markets, China included in that, at the expense of this sole focus that we've had on the US over recent years.
If there is some kind, I mean, 2025 was quite strange because you had, talk about bubbles and you had a little bit of a pullback, but then AI stocks actually managed to still win. Are we going to see the same dynamic in 2026, or could you see a washout of the smaller companies with the bigger companies coming in, still financially strong, and buy them up?
Look, I think you have to be broadly hedging your bets here. We think private equity is likely to hold some of the biggest winners in AI over the coming years. It will not only be the US mega caps that win this race. I think there are key questions around the progress that we're going to see, not just from Chinese names, but other parts of the Asian tech universe. And then we also start to think about some of the more sort of ingrained focus on the sectors that could be the big beneficiaries. So look at banks as a prime example here, where they've had a good run over recent years, but still I think are at the very early stages of being able to demonstrate the revenue and margin improvements that we're likely to see off the embracing of this new technology. So broadly, I think it's about spreading where you want to take your risk in portfolios, and that's true whether it's public versus private, that's true regionally and across sectors, while all still having a relatively positive view on this AI trade continuing.
It's a bit like the U.S. administration mindset right now. Diversify.
Diversify. Play every possible card you have and hope for the best.
Thank you both for joining us. Christopher Sabatini, Latin America, a senior fellow at Chatham House, and Hugh Gimber, global market strategist at JPMorgan Asset Management. Coming up, Bulgaria joins the euro area after almost 2 decades of integration. But the big moment is spoiled by, of course, this political upheaval. So we'll talk about Europe, what it can do next. That's, of course, coming up shortly, and this is Bloomberg. The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, the chief executive of Nvidia says production of the company's highly anticipated new artificial intelligence chips is on track and demand is strong. Speaking at CES in Las Vegas, Jensen Huang said customers will soon be able to try the Rubin semiconductors, which are expected to speed up AI development.
This is the Vera CPU. It's got 88 CPU cores, and the CPU cores are designed to be multi-threaded. But the multi-threaded nature of Vera was designed so that each one of the 176 threads could get its full performance. So it's essentially as if there's 176 cores, but only 88 physical cores. So these cores were designed in using a technology called spatial multi-threading. But the I/O performance is incredible.
Well, let's bring in opening trade anchor Tom McKenzie. Tom, first of all, he just has a great look, but Nvidia very bullish, still very bullish, announcing new AI tools.
Yeah, it's hard not to be distracted by the new upgraded jacket, it seems, from Jensen Huang. Yes, look, I think a couple of key things that came out from this speech and really setting the agenda. And let's not forget, this is a more than $4 trillion market cap company, by far the largest. And so all eyes on this speech in terms of setting the mood music, really, for AI and the demand picture into 2026. I think a couple of key things. Number one, he pulled forward the details around the Vera Rubin. You got some specificity from that soundbite there. Normally, you don't get these details in terms of the new chipsets until about spring, but he's pulled them forward. He says that's because there's just so much demand. He wanted to give his customers and clients a view in terms of how that is progressing. They're in production. They've got hold of them now. They've been produced, of course, in foundries like TSMC, and they will be ready to be shipped to customers in the second half of this year. So that's really significant. Another significant piece, I think, is this real laser-like focus now on embodied AI and how Nvidia plays into that. So we're talking robotics, we're talking autonomous vehicles. That seems to be being set up for a really big theme and a big trend in 2026, and clearly Nvidia has their eyes on that. They're also the full stack. He talked about the full stack, so they're not just the chips, they're also the servicing, the networking, and the software that goes on top of that. And so building out those prospects as well. And interestingly, talking about China, saying that the H200, which is the chip that the Trump administration says they may allow into the Chinese market, he says, we've got the licenses in place, we're seeing a lot of demand in China. If and when those licenses get approved, that could be, they've talked previously about that potentially being a $50 billion market that they're not currently accounting for in their earnings. Tom,
so AMD also unveiled a new chip. Can it actually dent Nvidia's dominance?
Yeah, so Lisa Su, the CEO, you're rightly saying that she got up and gave a keynote speech as well. They are seen as the main competitor to Nvidia. Now, their market share is far, far smaller, but they continue to progress. And again, Lisa Su saying that there is such strong demand there. And I'll just take a quote from her. The rate and pace of AI innovation has been incredible. We are just getting started. She was joined on stage by OpenAI's co-founder, Greg Brockman. He talked about the need for compute from OpenAI. They have a partnership with AMD. And she also released a new chip for the corporate data center use as well. So she talked about that and also gave a preview of their upcoming chips that will be for AI data centers in 2027 and AI chips for laptops and computers as well on the edge, so-called edge computing. So certainly AMD continue to develop and innovate and try to carve out more market share. There's more competition coming up from the likes of Alphabet and Google with their TPU chips. And so that is a question mark in terms of how AMD positions itself. But clearly, Lisa Su and the team think they have the products needed to continue to carve out at least some market share from Nvidia.
Tom, thank you so much. Tom McKenzie there with the very latest on AMD and on Nvidia. Now, the ECB president, Christine Lagarde, has hailed Bulgaria's membership of the euro area as a testament to Europe's ability to defy international headwinds. The country became the 21st to adopt the euro on January 1st, but the big moment was tarnished by political turmoil, with the government collapsing just weeks before. Well, joining us now is Maria Simeonova, head of the Sofia office at the European Council on Foreign Relations. Maria, thank you for joining us. First of all, what is Bulgaria joining? What will they get from joining the euro?
Bulgaria became the 21st member of the Eurozone, and this is a recognition of consistent efforts towards this direction since Bulgaria's intention to join the European Union in the beginning of the century. There is a lot to gain. Bulgaria is becoming part of the decision-making process of the European Central Bank. There will be more credibility in the Bulgarian economy, with the hope that this will lead to higher investments. The Bulgarian economy has been on a positive trend, but definitely it needs sustainability through more investments.
So, Maria, what happens next? I mean, this is a very difficult moment for the EU at all. Will Bulgaria help the EU in any way, shape or form, or is the government just too unstable?
Well, as you started telling, in December, we witnessed one of the biggest protests in Bulgaria since the 90s. Those protests were provoked not because of the Eurozone accession, but just the contrary, because citizens want Bulgaria to develop as a European country with European future and to abolish any signs of erosion of rule of law and political meddling into the judiciary. So this has been the main goal of the citizens to, with the economic development, to finally finish this circle of or I should say half reforms in the judiciary system. So this is basically a conversation of what follows after Bulgaria benefited fully from its EU membership, because last year, exactly again on 1st of January, Bulgaria became full-fledged member of the Schengen area. And now with the Eurozone accession, the European integration cycle is completed. But what is now a priority for the Bulgarian citizens, many of them young people, many of them returning to Bulgaria from abroad, is that the institutions are resilient and the image of Bulgaria as the corrupt country is abolished.
But Maria, I mean, it looks like yet another election, the 8th since 2021, right, is coming. So what kind of warning is this for Europe? And if the result is actually, could it change its pro-EU orientation if the political crisis stays for too long?
Well, indeed, I don't, like speaking from the ground, we voted 7 times in only 4 years. Now this will be the 8th election since 2020. And citizens don't seem to see this as a factor for political instability. It is just the contrary. It's time to abolish any models that bring corruption into political governance. And inevitably, when there is corruption in the governing system, there is a risk of geopolitical shifts. And this is exactly what could have happened with the previous Bulgarian government and the signs that were coming. For example, not supporting a decision in the European Union to use the Russian frozen assets, which came, as a surprise. So when there is corruption, there is always a risk to bring in the country malign influence, and in the Bulgarian case, this is the Russian influence, which has been.
But Maria,
yes.
Are you worried that as the euro area incentive is gone, Bulgaria actually abandons fiscal discipline, low debt levels, which for the moment are amongst the lowest in the EU?
Actually, by fulfilling the Maastricht criteria, this was a recognition for consistent conservative fiscal policy. And the protests, the main trigger for the protests in December was indeed the national state budget, which offered a shift from this policy, meaning higher taxes, social security, unprecedented increase in the salaries in the public sector. So this budget that the citizens protested in their thousands was basically a shift from this very consistent fiscal policy. But the reaction of the people show that it will require accountability by the politicians, not to change or to make to bring turbulences in this fiscal policy of Bulgaria that brought it into the Eurozone in such a defining moment for Europe.
Yeah. Maria, thank you so much. Maria Simeonova there, head of the Sofia office at the European Council on Foreign Relations. Now, coming up, we'll talk to James Arnold, co-head of Strategic Insights and advisory at UBS, about the FTSE 100's bull run. How much further can the market actually go? We'll also talk about the Chancellor and, of course, some of the budget measures put in place. This is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. A new leader is sworn in Venezuela as Nicolás Maduro and his wife plead not guilty to narco-terrorism charges in New York. The Danish Prime Minister warns that a U.S. attack on Greenland would be the end of NATO, but says Donald Trump's threats should be taken seriously. And the Chief Executive of Nvidia says production of its next-gen AI chip is on track, but there's competition in the wings in the form of a new chip unveiled by rival AMD. Now, French inflation has actually slowed to a 7-month low on falling energy costs. German CPI out at 1 p.m. UK time. Data for the euro area is due tomorrow. Now, for more on all of this, we're joined by Bloomberg's Jana Randau in Frankfurt. Jana, Happy New Year. So good to speak to you. What do you make of the figures released in France?
Weaker than what we would like to see for the Eurozone, but also not much of a surprise. France has been below 2% inflation for quite some time now, and it's steady there. Most of it is due to energy, to weak manufacturing. Services are still running above 2%. So overall, not much of a surprise.
We're also expecting, of course, Germany, but also euro area inflation. What does that all mean for the ECB going forward?
Yeah, Germany is maybe the slightly more interesting story today because we do see in the annual data the states published earlier this morning that inflation slowed down quite sharply. But if you look at the monthly change, then that was quite a bit stronger than expected. So a bit of a mixed bag, and that tells you that inflation is more or less on track on track toward target where the ECB wants it to go. But it's not a black and white story. So there are things that are happening under the hood. The ECB flagged stronger than expected wage growth, for example, in its last press conference in 2025. So overall, everything that we've seen so far this year in terms of data speaks for steady hand policy, interest rates on hold, looking at what the economy does, what inflation trends do, and then decide where to go. But I don't expect any changes for quite some time.
Jana, thank you so much. Jana Randau there in Frankfurt. Now, a 5-year bull run has propelled the FTSE 100 up by more than 50%. After passing the 10,000 mark, the index has reached a market cap of $3.9 trillion. Now, while that's about the size of the UK economy, it also remains well short of the market cap of a single US tech giant, and that's Nvidia. Well, joining us now is James Arnold, co-head of Strategic Insights and Advisory at UBS. Thank you so much for joining us. Where do you see the UK fitting in right now?
It is really funny when you use that introduction. So 3 years ago, we wrote a piece arguing that the UK wasn't moribund. And if you cast your mind back, the UK was critiqued to be a failing market, it had no liquidity, it didn't value companies properly, and was destined to sort of die a death. And actually now, as you say, now we're 50% up in a very short period of time. So how things change. So what did we argue 3 years ago? We argued two things. So firstly, we argued the market actually functions really well, right? So the market functions, there's enough liquidity for companies to do what they wanted to do. There's not as much liquidity as there is in other markets, but there was enough. Second, we argued that the market valued fundamentals. So it valued return on capital and it valued growth. And then thirdly, we argued that actually one of the really big issues for the UK market had gone all the way back to the Brexit vote. And there's no doubt if post that vote, and for the 5, 6, 7 years post that, if you were to allocate $1 of capital into a country around the world, the UK moved itself a little bit down that list because of the events post that. So in that piece 3 years ago, we said James, those things are normalising.
I guess, 3 years ago feels like a very long time away because we had a new government, because there's a number of budgets that actually may have changed something. Yeah. But what I hear from chief executives is that a lot of them, if they could leave the UK for just the capital pool reason, would maybe leave the UK to go elsewhere. Do you find that, or is there what's the problem here?
So I think that is a question that I think any board needs to ask itself on a regular basis. So you then say, well, what are the potential reasons for wanting to leave the UK? And I think one of the ones you hear quite frequently is a higher valuation. The work that we've done argues that actually there has always been, over history, a difference in valuation between the US market and the UK. But when you dig into why that is, it's because it has a high return on capital and it grows faster. Right. So at the individual company level, unless you can transform your returns by transforming geography and listing, it seems unlikely that you're going to materially change your valuation.
Are the UK markets undervalued?
Again, I think at an aggregate level, it's really hard to answer that. I mean, you look at the sectors that are driving, the big sectors within the UK, yield curves remain steep, which is very helpful for banks. There's obviously plenty of macro activity that helps the miners and at the moment as well. So big chunks of the UK market, I feel very well supported, but I'm not clever enough to tell you whether the market's cheap or not.
When you look at IPO outlook, what's in store for the UK? Will it be able to attract new IPOs, or do they want to go elsewhere?
Yeah, and again, a great question. And that journey over 3 years has gone from nothing to and there's been plenty of people in the ECM world that can tell you the exact names, but there's no doubt there is more activity planned in the UK. I think the UK has opened up again to IPOs. The question really is, if you're a genuinely global company, what is the right home for your listing? The UK feels like it is very much back at that top tier in terms of being able to argue that the UK should be the case.
I mean, what are global businesses mostly worried about? Are they, affected by geopolitics? Do they think about AI, or do they think of the capital pool available and actually where they should be listing?
So on that last point, I think capital has never been more global. And one of the things we spend our time talking to CEOs and CFOs about is, where does your next investor come from? And previously, that was a very domestic conversation. If you're a UK company, the likelihood your next investor would be a UK institution. And now that's absolutely not the case. So we talk to companies about internationalizing their equity stories, opening the pools of capital. Are they worried about any of those specific factors? I mean, geopolitics, lots of column inches, lots of value added, I'm not so sure. I think people tend to be very bottom up. They're aware, but they focus on their businesses. I think AI 25 was a story of straightforward winners and losers without too much thought necessarily behind lots of that. And I think one of the things that really fascinates into 26 is you'll start to see that picture be painted. You'll start to see the colours and the lines emerge of what actually it means. I think there's already some very good case studies of away from the AI technology side into real companies, where real companies are using the technology very well.
But how are companies using AI? Actually, if it works well, should it just not have an impact on your revenue instead of, saying, look, we have AI, look at the shiny new thing, it'll make us better?
Three questions. One, do you have a process in which AI can impact that process?
Yeah.
Two, once you've done that, does that automation of that process create extra revenue growth, as you say, or perhaps it creates a cost saving? And then three, and by far the most interesting, but nobody ever talks about, is once you created that incremental economic profit, where does it sit? Does it go to the technology providers, which the current market caps would suggest? Does it stay with you as a company? Does it perhaps get passed on to your customer? And I think that's why 26 to me is such an interesting year for AIs. We're going to get away from these big generalisms and start to get into the nitty-gritty for companies as to how durable incremental economic rent is.
But James, does it really depend on the chief executive on how AI is integrated in your company, or does it largely depend on actually where you sit on the sector you operate in?
Obviously, both are relevant. If you've got an entirely non-technology business or non-person business, you can't really use AI as much versus others where you can. So I think the sector matters a lot. There's no doubt that you see certain leaders we've met around the world that are really pushing that agenda through the organisation, and I think that undoubtedly helps people adopt the technology.
When you look at corporate M&A, are we going to see more of it?
Well, we saw a record year in 25. So there's a series of mega deals in the US. Has led that to be a sort of bumper year. So I think when we start at 26 with our conversations with CEOs, we see markets with record returns on capital. So profitability is really good. We've seen a record year for M&A. We see an IPO pipeline that's opening. And we recently wrote a paper on spin-offs, which have become a popular topic again as well. So when you think about a CEO, CFO's toolkit for 26, as much of it is open to them as has been for a very long period of time.
I guess the concern is that the U.S. at the moment has a mind of its own because of deregulation, because of animal spirits, just because it's different to what we're seeing in the UK and Europe. Do you see it translating into our markets here?
Yeah, I read far too many 2026 outlooks from people over Christmas, and I think that there are two very distinct drivers. So the US, you're right, is a very tech-centric, tech capex narrative into 26. The European Union, the EU more broadly, is a fiscal, it is a consumer and industrialization one. So there are different drivers to it. So I think the EU story can stand by itself.
Okay, James, thanks so much. James Arnold, co-head of Strategic Insights and Advisory at UBS. Now, new car sales in the UK have surpassed 2 million for the first time since the pandemic, buoyed in part by automakers offering more discounts on EVs. The Society of Motor Manufacturers and Traders says registrations rose 3.5% last year, with sales of fully electric models climbing around a quarter. Now, EVs now account for about 23% of the market, but that's short of the government's mandate for 28% of sales. And the British Retail Consortium says UK food inflation rose for the first time since August last month, nudging shoppers to seek value items during the key Christmas trading period. While food prices rose 3.3% from a year earlier in December, up from 3% the previous month. Well, that drove an uptick in overall shop price inflation to 0.7% year on year as non-food prices continued to drop. And Italy plans to back the Mercosur free trade agreement with the South American bloc of countries in a vote that will likely be the final major hurdle for the European Union to clinch the accord, which has been in the works for 25 years. Well, Bloomberg understands that Italy is expected to reverse course and support the deal when EU ambassadors vote on the measure on January 9th. Now, that would allow the EU to sign the treaty with the Mercosur countries on January 12th. Now, Next has raised its profit forecast for a fifth time this financial year after sales at the British retailer rose more than expected over Christmas. Now, for more on all of this, we're joined by our global business reporter, Jennifer Creary. Jennifer, thanks so much for joining us, and Happy New Year. Next results this morning, pretty upbeat. What do they tell us about how retail did over the Christmas period?
Yeah, I mean, this is so characteristic of Next, isn't it, to under-promise and over-deliver. So it raises pre-tax profits guidance for the fifth time this fiscal year. It's now expecting pre-tax profit of almost 1.2 billion. I think it's worth noting that a lot of that growth is coming from overseas. We saw that in previous quarters as well. So international sales are up almost 39%, UK sales up 6%. So a weaker UK consumer. You know, Next is often seen as sort of first out the gate with UK retail, and any trouble for Next is seen as a bad indicator for the rest of the UK high street. So I think one point I think really illustrates this well is that, you know, Next said that it had a lot more stock than it expected going to sales during this period. But its clearance rate was very good. So essentially, it was able to sell a lot of that excess inventory at the first discounted price. And what that tells us is that the UK consumer is really looking for that deal. A lot of those consumers waiting until after the Christmas period, during Boxing Day and afterwards, to get that kind of discounted price. So we're looking at consumers really looking for a deal now.
Right. So what does it tell us broadly about the UK consumption story?
Yes, so it's still a bit weak, right? So CEO Simon Wolfson said that next year is expecting sales and profit in the UK to be soft. He also said that during the last results as well, and he's blaming a lot of that on, you know, higher costs that are facing the UK consumer. Slower growth and the UK consumer really trying to swallow in a lot of those costs. So what that tells us is that, you know, it's going to be a bit of a slow start to I think 2026, and we're just going to have to see how the other kind of how Next peers fare. Yeah.
So is the worst behind us, or is it just too soon to call?
Yeah, so something that the BRC said was that that food inflation will remain sticky in 2026. So what that tells us is that for a lot of supermarkets, they're bearing a lot of the brunt of a lot of those cost pressures. And so we're going to see some difficulty going into 2026. And we've got some results coming out later this week. So we've got Tesco, the UK's biggest supermarket, also giving a trading update, as well as Marks and Spencer, you know, arguably Next's biggest competitor. So we're just going to have to wait and see how those retailers fare to get a better sense of what's happening with the UK retail landscape.
Jennifer, thank you so much. A terrific roundup there of what we're seeing in retail. Jennifer Creary, our global business reporter. Now, coming up, how stock exchangers are pulling out of all the stops to attract IPOs. We'll delve into the pipeline for 2026. That's next, and this is Bloomberg. The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, global stock exchanges have been pulling out all of the stops to attract IPOs amid fierce competition for the dwindling number of listings. Recent IPOs have been celebrated with everything from champagne and confetti to dancers and even lasers. Tom McKenzie has been looking at some of the entertaining ways in which IPOs have been celebrated.
An IPO is often the pinnacle of success for executives. There are speeches, hugs, even tears.
I achieved my dream.
The champagne and confetti and countdown clocks might look like a nice party, but it's serious business too. Listings have been dwindling in recent years in the aftermath of COVID and rate hikes to tackle inflation. Exchanges have been competing for a shrinking slice of that pie, and a good show is part of the marketing.
Part of getting the message out is a way that we effectively live the stories that the companies execute through the medium of an exchange. And yes, of course, it reaches out to companies which may be within an IPO pipeline.
Asia has dominated listings for the last few years, and its listing ceremonies mix tradition with pomp and some fun. In Hong Kong, there are gongs of different sizes.
So there's the standard size gong. We also have a bigger gong or a mega gong. That's for very special and larger companies listing in Hong Kong.
So, little surprise then that when China's CATL sold shares in May, raising a whopping $5.3 billion, no ordinary ceremony would do for the world's biggest maker of EV batteries. The Hong Kong exchange wheeled out its mega gong. With CATL shares handily beating global benchmarks since the listing, fortune has indeed been kind to the company. As Europe and the US look to rival Asia by claiming more new listings, the pizzazz, showmanship and company mascots show no signs of being canned as trading gets underway.
Fun package there with Tom McKenzie reporting. Now, let's get more on what 2026 holds in terms of IPOs. Charles Capel, Bloomberg's European Equity Capital Markets Editor, who joins us now. I mean, the real question is how would we celebrate if we were to IPO? And, of course, it has to be Formula One style, right? With the champagne bottles?
Absolutely. Champagne. And then I have a soft spot for a mascot as well. I really enjoyed the dancing tuna cans. And then Magnum, the Magnum Ice Cream Company, were giving out free ice cream. So I would have ice cream at mine.
We're having it all at our IPO. This is, Charles and Francine 2026. Okay, 2025 was a year of two halves for IPOs, right? Few to begin with, and then a pickup towards the end. What was driving that?
Yeah, well, look, IPOs are really fragile, delicate things. In order for issuers and bankers and their advisors to go ahead, they really need to feel comfortable that the market conditions are right. And at the start of last year, we had a big shock, which was, of course, the US tariffs. And that put a lot of people off coming to the market. And then towards the second half of the year, when things started to calm down a little bit more, there was a bit of pent-up demand, as well as your usual amount of IPOs. And so then you had sort of a very second half heavy, and that was particularly true in the US and Canada. The only exception to that was Hong Kong, which just kept trucking throughout the entire year. It was a crazy year for IPOs for them.
I mean, was that because it came from a lower base, or was it just what they were kind of offering and doing?
Yeah, Hong Kong came back with this, with a real resurgence, and they had a very low base, and then they just started building up a lot of momentum there. One particular highlight was CATL, the EV battery maker, and then when you get with those big companies coming, it starts to filter through in confidence to the rest of the market, encourages more companies through, and their pipeline, looking ahead, everything that they're saying is also very strong.
Charles, looking ahead, what's the outlook for 2026?
It's pretty good. Bankers, especially ECM bankers, they're quite optimistic. The macroeconomic conditions seem relatively stable. Interest rates look like they're going to come down alongside inflation. There are a couple of concerns, of course. One would be any AI bubble and that bursting. And then US midterms is also more uncertainty. So we may see a lot of people coming relatively early to try and get these relatively calm markets, macroeconomic conditions prevailing and making sure it doesn't filter through to equity markets. But hopefully it's looking pretty good.
The largest candidates in Europe.
Yes.
They'd be completely dwarfed, right, by an OpenAI or something like that in the US.
Yeah, exactly. So you have these like mega caps in the US. You have your SpaceX, your OpenAI. They're looking at an IPO maybe this year, maybe next. But then you do have some substantial candidates coming through in Europe, and there's always a bit of an adjustment factor that you need in terms of market cap. But you have two really big defense companies, CSG and KNDS. They're crucial for arming the war in Ukraine and also for these European defense spending commitments. They're really important companies, and they are going to have multi-billion euro market caps. They're looking at IPOs this year, and they could herald a wave of more IPOs to come.
So what about some of the other biggest candidates?
Yeah, well, as you said, so SpaceX...
it's huge. Yeah. Is SpaceX, is it bigger than OpenAI if it goes through, or do we know yet?
I don't think we would know just yet. I've seen sort of $1 trillion market caps thrown around sort of for both of them. SpaceX was recently valued at $800 million. These are IPOs that they would suck so much attention from the market. fund managers would all be looking at them, everyone would be trying to get in on them, and you kind of wonder how much dry powder would be left to put into all of the other IPOs. So it would be, you'd have to be a brave company to go up against them.
Charles, what about the UK? I mean, we had a good conversation, with someone from UBS, and he was more bullish than maybe some others in the UK right now.
Yeah.
I mean, can it attract the good IPOs, the big IPOs?
There are a couple of big IPOs coming down the line for the UK. There's Visma, that is a private equity-backed software company. Navoy Mining is also reportedly looking at a list. Those would be significant IPOs, multi-billion pound IPOs. They would potentially introduce a little bit more confidence into the market, but that also needs to filter down into the smaller and the mid caps. What the UK has done is a huge amount of regulatory reform. They've changed a lot of the details around the listing rules, which they say makes the exchange more competitive. Yeah. Now, the question is, can you then attract the capital? When companies come, will there be fund managers to buy into them? Will they want to? And the flip side of that is that you need the companies that fund managers want to buy into, and if all of the excitement is happening in the US with SpaceX and OpenAI and these big AI names, that may suck some of the attention.
Charles, thank you so much. Charles Capel, there, Bloomberg's European Equity Capital Markets editor. Now, the French president is hosting Ukraine's allies in Europe and the U.S. for talks today in the hope of finalizing a security agreement which could see American boots on the ground after the end of the conflict with Russia. We're now joined by Greg Sullivan, Bloomberg's Russia economy and government editor. Greg, good morning, first of all, but how have Trump's actions in Venezuela and threats on Greenland changed the Ukraine talks in Paris and the conversation around the role that the U.S. and Europe will play in post-war Kyiv?
Well, it's certainly an issue that will be on a lot of European leaders' minds as they head into these talks. But really what it does is underscore a worry or even a reality that was already there. And that is that Europe wants to be engaged, wants to be at the table, and is concerned that the U.S. and specifically the Trump administration does not think they need to be. They don't think in previous rounds of negotiations, they've largely been held between the U.S. and Russia, leaving Europe on the sidelines. Europe obviously sees Ukraine as part of its security infrastructure and believes it needs to be part of those talks. Obviously, the Trump administration didn't consult Europe before the actions in Venezuela. So there's really that underscoring that worry that Europe will be left out. Furthermore, it adds urgency. European leaders are concerned that the Trump administration might become more focused on the Western Hemisphere, on Maduro, Venezuela, Cuba. And also it stands to make the talks more difficult, given that Trump has made these threats against Greenland, obviously a territory of Denmark, part of both NATO and Europe. So that will make the talks more difficult. And European leaders going into these talks are going to seek to try and keep the U.S. focused, engaged on Ukraine, and not just distracted with the Western Hemisphere. So obviously it's something that's going to be on a lot of leaders' minds, and it really is sort of adding a new layer of complexity to these talks.
Yeah, I mean, it sounds like a bit of a nightmare. What will the Paris talks actually achieve today?
So what a lot of leaders are looking for going in is to actually finalize some of these security agreements. Obviously, earlier we heard that President Volodymyr Zelensky of Ukraine and President Donald Trump of the United States, they said that they had reached an agreement on the U.S.-Ukraine security guarantees framework, but now they need to finalize that with Europe. Obviously, there hasn't been much that we've seen on paper. We do know that U.S. troops could potentially be on the ground, though mostly what we've heard is talk about intelligence sharing, help monitoring any potential ceasefire down the road. So they really want to finalize the security guarantee framework. But I would caution that even if they do finalize it, it's not clear that Russian President Vladimir Putin will accept it. NATO troops in Ukraine has long been a red line for him, but that is very central to what Ukraine needs to seek peace. They want these security agreements because they want to make sure Russia doesn't reinstigate hostilities. And the other thing that I would caution is that there's another major hurdle that not much progress has been made on, and that's territory. So even if they do wrap up some sort of security agreement consensus, the territory issue still remains.
It's so interesting. Greg, thank you so much. I mean, one of the other questions is actually how would Vladimir Putin be looking at this? So we'll have plenty more on that. Maybe with a bit of envy because of what Trump did in Venezuela. Greg Sullivan there with the very latest on these coalition talks. Now, later on, we'll be speaking with the Nvidia Chief Executive, Jensen Huang, at CES in Las Vegas. Catch that conversation 6:15 p.m. London time. Up next, a Bloomberg Brief, and this is Bloomberg.